Welcome to Option Trades Today. I'm Tony the Bat Batista and I have a trade idea for you today. February 1st, 2024. Rabbit to everybody out there. Let's take a look at what's going on in the market. Even the S&P's up $11.50. NASDAQ up $38 and change. Relatively small 0.25% moves in the overall market. Dow keeping that trend higher, up 18 right now, and only the Russell is down $9.30 on a 2-to-1 margin to the even the S&Ps and the Russell. Interesting enough, volatility at yesterday's high of 15 points. Now, I point that out to you every time we do this podcast. I love to look at volatility as an indication on whether this market has any legs to the move, and I would think that the move is higher right now, even though we had a nice sell-off yesterday. If today's move has any legs, and volatility is kind of showing me that maybe we're going to have a little bit more two-sided action in this market. Only time will tell. What am I looking to trade right now? Well, I'm going to stick with that post-earnings theme. AMD, which had earnings the other day. You could see here as volatility has collapsed to still an IV rank of 38. If you notice here, volatility usually goes into the 19, 20, 15 to 25 range. It's flirting with 40. Volatility staying bid, and probably rightfully so in AMD. There's no free ride here, but I like these post-earnings trades. I like to place trades that don't have any earnings looming. You can see that the volatility of 44% is pretty good on this 160, let's just call it $167 stock. What am I looking to do? I'm looking to do a classic Strangle in here, but I am going to show you a little bit how you can reduce some of your buying power by using an iron condor. What am I doing here? I'm going down to the, I'll go up to the 195 call. That's right outside the expected move, that dotted line there, that one standard deviation. 18 delta call, so I'm going to make it delta neutral. I'm not going to play any games here. I'm going to let the market beat me. I'm going to go to those 145 puts, the same standard deviation to the downside. I was able to collect $4.32 when I was making this. Shortly after I made this trade, it went to 134, 135 bid. So 434 bid. I think you'll be able to get filled at 432. Also, when I do these trades, I like to post them as quickly as I can. And if you go to the follow page, you'll see here that I placed this trade when the stock was 166.69. The stock is about 20 cents higher right now. I do this so to give you an idea of what you should be able to get filled at with the stock, where the stock is trading when you get to see this video. I got filled at 432. You'll notice here I always put a little comment there. It's a post-earnings strangle, close to one standard deviations away. I should have written with my short strikes. I will add that when I'm done with the video here. All right, so I'm using $2,100 in buying power. I just took off my Roku trade that I did earlier this year on January 4th, I believe. Roku, I was able, after a couple of, you'll notice on January 1st, Roku is sitting right where it is right now. And had I done nothing, I would have made $2 on this strangle that I put on. Instead, I got whipped to the upside. I got whipped to the downside. I may have gotten whipped to the upside again and was able to close it for $1 profit. Sometimes the mechanics help you. Sometimes the mechanics help you stay in the trade, as it did in Roku here. Maybe I would have gotten out of the trade and taken a loss had I done nothing. But I was able to make $1. So I took off that, and I used a significant amount of buying power. It is only a $90 stock. AMD is twice as large as Roku, so it's going to be using more buying power. Like I just told you, I'm using around $2,100 in buying power. There's that mid price at $432. I got filled at $2,100. So I'm replacing one strangle that I had in my portfolio with another one. A nice high IV rank. Roku has a good high IV rank too, but you'll notice that Roku has earnings looming next month. No earnings here for AMD. This is a 74% pop. You know I like to have a probability profit, if you've watched this podcast, in that 60 to 65 range. $14 a day in theta decay, 2.5 short deltas. So you notice here the price is going ever so slightly higher as the stock goes higher. Listen, when you're placing a trade, you should watch what the stock is doing too. And I know 2, 3, 4, 5 deltas is small, but it is going to help you pick up those pennies when you're watching the stock. It looks like it's catching a bid. You watch the AMD S&Ps. You look at the Russell. Russell isn't down as much as it was. Look at the NASDAQ and the AMD S&Ps. They've actually rallied. They were only up 0.25%. Maybe you place this a little bit higher, expecting it to maybe rally for the next couple of minutes. Or if you're doing 2 tranches, maybe you go in at 432 and you put the other one at 434 or 435. See if you get lucky. Anyway, that's just market awareness when you're trading. All right, so I'm using $2,100 in a IRA account. If you were doing this same trade, you'd be using like $14,000. And I like to simulate the same type of buying power I would in an IRA account that I would in a margin account. So you're going to have to take away some of this credit, go about $20 wide with your wings that you're going to buy. Of course, your credit is going to be reduced by those wings that you buy. I'll go $20 wide to the upside. You'll notice there's no 215, so I'll just go to the 220s. I'll default to taking a little bit more risk. Then I'm using that $2,100 in buying power. I am collecting $3.30. My theta decay is cut, obviously, because I have less credit. The delta is also cut, so it's a lot more of a delta neutral trade, and also a less sensitive to volatility trade, because you are buying some wings that are going to mitigate any volatility that works for you or against you, ever so slightly. Not a 1-to-1 ratio, but it's going to mitigate the volatility. The Strangle is a lot more sensitive to theta decay and volatility contraction and expansion. If I was looking to make this trade, I might go down a strike to try to get myself a little bit more credit, maybe closer to that $3 to $4 in credit on a $15 or almost $20 wide on one side, obviously, and $20 wide on the other side. I'd like to get around a third. I can't get a third of the credit, so I might move those strikes ever so slightly. Here you're looking at almost $10 wide, obviously $10 wide on the upside, $15 wide on the downside, and you're able to get $3.40. I mean, it's completely up to you which trade you look at. They're all going to be similar to each other, but if buying power is a concern, and it is to everyone, no matter what your account size is, I think a nice little hack is trying to get the buying power as close as possible, still maintaining the same amount of credit you would in a margin account in an IRA account. And I hope you like this little talk that we had here and that trade in AMD that has a good IV rank of 38. I'm just going to let AMD beat me. I'm not going to pick a direction on this. I already did that in NVIDIA and I'm paying the price. So I'm just going to let the market beat me and just be mechanical with these trades moving forward in 2024. You know what you should do to be mechanical? Move, transfer, bring your account to Tasty Trade. Help us keep the lights on here. They're giving away some great promotional money for bringing your account. I think no matter almost what size the account is, they'll give you some sort of money back. Check the fine print. To all our friends, support at tastytrade.com or give them a buzz. I'd love to hear from you. I am Bat at tastylive.com. If you want to reach me or talk to me, you can always write something on YouTube, and I answer all the comments there. At least I do my best to. I appreciate your time. Thank you.